Hey everybody, welcome back to the channel. We have got a lot to discuss in the world of Palantir today. Three things that are top of mind for Palantir. Number one, Palantir put out their Q3 2023 earnings date yesterday, and they did it with a little bit of a surprise that kind of has a lot of people in the community going, hey, why are they doing this? So we've got some stuff to analyze there, and we'll talk about that Q3 2023 earnings date that's coming up. Number two, a former Palantir engineer talked today about some of his experiences with the company when he was there, things that have changed, and if he believes Palantir actually has a moat or not. And finally, AIP Bootcamps. AIP is one of Palantir's latest products. The company is obviously assuming a lot of growth is going to come from this product. It's already growing 50% month over month, but the reason it's growing in terms of bringing customers into the pipeline, even if they're not monetizing those customers yet, is because of their go-to-market strategy that, as per the last AIP con, basically switched from, instead of doing these pilots for 6 months, having 2 to 3 day boot camps where clients come in, or Palantir will come to you, they'll do a boot camp with real data, you'll actually be able to use that data, get a working product, and then after those 2-3 days, you can decide if the product is useful or not. That boot camp strategy, Palantir put out a lot of information out yesterday about how it's working, why it's working, and how it's leading to more client growth. So we're going to discuss that strategy, talk about why it's important, and ultimately how Palantir can scale that strategy. Let's get into it. So first thing I want to do before I get into it is price action. Palantir, $17.58 around 1 o'clock that I'm recording this video, down 2% on the day. Not really that concerning. The main reason it's down, in my opinion, is because it is a Friday and it is going to sell off. People are going to take their profits. We'll see next week if it continues to the upside or the downside. Obviously, being up 11% in a week is a big deal, and that's what you kind of want to see. You're up a lot, down a little, and then you keep going up versus just keep going up or keep going down. You want to have it be a slow, steady ride. But $17.59 still pretty amazing from where it was just a week ago, and down likely because today's a Friday and things are just going to sell off on a Friday. Okay, so let's get into the big news of the day. Palantir has announced the date of their third quarter 2023 earnings. It will be on Thursday, November 2nd, prior to the open of the US markets. Now, this is really interesting. The reason this is interesting is because A, it's November 2nd. Usually they tend to do November 7th to November 10th. So they're doing it a week earlier than they historically have done it, which is, I don't know why they're doing that, but they're doing that. And this is a shift from the previous 3 quarters of reporting after the markets close. So if you remember, the last time we had a pre-market open for the earnings on Palantir, it was Q3 of 2022. And if you've been a Palantir shareholder for a long time, you know what Q3 2022 was. This was the infamous quarter where Alex Karp, the CEO of Palantir, the guy we all love, the guy we think can really take this company to the promised land, on the earnings call said there was no video, there was just audio. Yeah, I don't think we're going to be profitable till 2025. And he actually took that pause before he said 2025. And my jaw dropped. I was like, you went public in 2020 and you're not going to be profitable for the next 5 years? Like, what's going on? And obviously he was sandbagging because in the next 3 months, Palantir ended up becoming GAAP profitable. But the really interesting thing here is that Q4 2022, Q3 or Q1 2023, and Q2 2023, Palantir shifted their earnings to after hours. And for the past 3 quarters, we've had some phenomenal earnings. I mean, like last quarter wasn't amazing, but it definitely wasn't bad, right? Obviously becoming GAAP profitable, all that stuff. So, or continuing our GAAP profitability. It just, the last 3 quarters have been okay. Really, the stock's been up really nicely. So some people are a little concerned, like, look, why are we going back to the morning? Because we have PTSD, literally, of Karp talking about stuff in the morning and the stock tanking dramatically. It was funny because Q3 2021, I remember earnings was in the morning and the stock tanked from 23 to 19 and I was buying at 19. I'm one of the people that actually admit in 2021 I was buying at 19. And now if the stock got to 19 in Q3 2023, I would be ecstatic, right? So it's just crazy how things change. So ultimately, what is the answer to this question? Well, you know what? I looked up and I found some articles, and I found an article from 2014 from Quartz that actually goes a lot more deeper into why companies choose to report or not report at a certain time. And they did a study. The researchers compiled a data set of more than 120,000 quarterly earning announcements from 2000 to 2011 with precise dates and timestamps. The data set is both larger and likely and more accurate than what they've had available before. And these were the results they came up to. The measures of a market attention around what times are the best to drop a bad earnings report. And the data shows that after the markets close and on busy days, but not particularly Fridays, is the best day to announce a bad report. Meaning, if you have a bad report, but there's a massive event happening in the news cycle and like the news just doesn't really care about your crappy report, then that's a good time to drop the report. after hours is a good time to drop the report. And Fridays is definitely a horrible time to drop the report because then Saturday, Sunday, you have everyone selling off in the after hours. So people tend to not report on Fridays. I mean, what public company do you know that's like of important magnitude reports on Friday? Really none of them. All of them do it from Monday and Thursday. So technically, if we go by this data set, after hours is a good time to drop bad news, not on a Friday and on a busy day. Palantir's reporting it in the morning, so we check that box. It's actually not after hours. And it's not on a Friday, it's on a Thursday. And I don't know if the day's going to be busy or not on November 2nd. We'll see what happens on that day. But like, maybe it's actually a good thing that we're dropping in the morning, because this study that compiled 11 years worth of data says the best time to report bad news is after hours, and we're reporting good news, hopefully in the pre-markets. So maybe pre-market's going to be fine. Then I went to ask some AI, ChatGPT, for why a company would want to report if they had bad news in the morning. And the reasons they had were limited pre-market trading, lack of analyst coverage in the morning, reduced liquidity, emotional reactions, overnight news flow, time zones, all of these different ways that companies could basically get away with saying, all right, we got a bad report, let's put it out in the morning. Let's, let the stock kind of deal with the volatility of the day, but at least it's not after hours where there could be a massive sell-off. And it's definitely not on a Friday, which a lot of people tend to sell off the market before going into the weekend. Now, is there really any truth at all to any of this? I have no idea. Maybe it's good, maybe it's bad. Honestly, we have no idea if them changing from 3/4 of after hours into the morning really has any impact. But a couple of quotes that I thought was really interesting here. So Jeff Morgan, president of the National Investors Relations Institute, said, some people are morning people and some people are afternoon people. He adds that once a company picks a time, it sticks. So we want to be sure that whatever we do every quarter, we do the same thing the next quarter so that there's not anybody wondering why we're making changes. So his argument is like, look, when you pick a time, just always stay to that time, because if you change that time, you're going to have a bunch of investors just like asking why, right? And if the past quarters before after hours were bad, like objectively not good, and now after hours they ended up being good, why are you doing the switch? I think that's what all of us are wondering. It's like, well, why is the switch happening? And another quote here from an associate professor at MIT Sloan: companies tend to rush out and share good news when they have bad news, they tend to push it back. So one could argue, right, the colleagues recently conducted a study that helps isolate the impact of timing when public companies release their earnings report. Their findings could take on an added significance as companies prepare. So maybe Palantir has good news and they want to, really show that good news, given they're doing it early on November 2nd, a week earlier than prior, and actually early in the morning. And maybe, if they had bad news, they would want to delay it a little bit more, a week later, and do it after hours. Honestly, I have no clue. I would love to know what you guys think in the comments. Do you think that this earnings change from after hours to the pre-market matters at all? In terms of gap profitability, I think we're going to be gap profitable. So I don't think gap profitability is one of those things that's like really a debate, or it's one of those things that would have prompted them, because they're not gap profitable, to do it in the morning, because I think objectively we are being gap profitable. Like if I'm wrong, I'm wrong, but I am willing to bet a lot that Palantir is gap profitable, because management knows if they miss gap profitability on this quarter, they have to wait another year, another 4 consecutive quarters just to become gap profitable in order to enter the S&P 500. And so the magnitude of making sure whatever the hell you got to do, you got to take $3 billion and put it into treasury bonds, whatever you got to do to get that gap profitability, I think they will come through on that 100%. What I don't know is if the growth is going to happen, if the revenue growth is going to happen, or if there's going to be any other major catalyst that could push the stock higher. But it's going to be in the morning. I'll be live streaming it. Let me know what you think in the comments, and we will see what happens to Palantir on November 2nd. All right, next thing I want to talk about is a former engineer at Palantir who worked there for 7 years, sharing his views about the company and the competitive landscape. This was given to AlphaSense, which is a company that basically takes a bunch of transcriptions of what people say around a company and tries to compile them together to sell for like data and intelligence around if you should invest in a company or not. And they just got a bunch of transcripts from an interview of a former engineer who worked at Palantir. So here are the 7 things that he had to say, which were really, really interesting. Number 1, Palantir in the last years has significantly improved the speed of deployment of its Foundry platform for clients. When they rolled out multi-tenancy, that helped a lot with deployment. Regarding on-prem, the biggest bottleneck is usually the client's procurement. So the ability for them to actually deploy the platform that customers are procuring, which in this case, the moneymaker for Palantir is Foundry, has increased significantly. And this should have happened, right? Over the past couple of years, Palantir has gotten stronger, more efficient, less bureaucratic, more effective, etc. So they should be able, by the time you buy the software, hopefully within weeks, if not days, that stuff is onto your systems, things are ready to go, and at least you have people working with you to get Foundry set up and going. Number 2, In the expert's experience, when it comes to Palantir competitors, it's often the clients themselves who think they can build a similar platform with OS tools. We've been hearing this since really 2021, that Palantir said their biggest competitor is not a separate company, but it's the legacy IT infrastructure that exists within the actual institutions they're trying to sell to, because those clients think they can do a better job themselves, and most of the time they don't end up doing it. But that doesn't really work on the cost benefit side. From other companies, Databricks would be the closest to a competitor in a sense, but it lacks the permissioning flows and Foundry and the concept of an ontology. We've also heard this as well, that Databricks is kind of like that core competitor to Palantir. Databricks right now in the private market is valued at like $43 billion. That's even higher than Palantir. But Palantir obviously having a Foundry and ontology, Databricks buying a company for $1.3 billion a couple months ago to kind of compete with Palantir's AIP AI infrastructure. So that'll be a competition to see whatever happens over the next couple of years. But this engineer says that the concept of an ontology Databricks doesn't really have. Number 3, when the expert was still there about a year ago, Palantir's momentum was accelerating. When he started, there were large teams per deployment of 8 to 10 engineers working with one client. By the time he left, that had dropped to about 2 engineers per client, which is really good. You don't want to have 10 engineers. These are highly paid individuals dedicated to one client. You want to have more clients, less engineers per client, less cooks in the kitchen, having the client have an easy way to be able to access and do all the things that they need to do versus having 10 people dedicated to one client getting it set up. So it's good that the speed of deployment and the momentum around how they have large teams versus quick and nimble teams per client is actually increasing as well. Number 4, the best vertical for Palantir is manufacturing. This was actually very interesting to me. I didn't know it was going to be manufacturing, but it makes sense when I think about it because supply chains and supply chain logistics and all the partnerships Palantir has around supply chains. Palantir has private partnerships with AWS around manufacturing. So it makes sense the more I think about it, but I didn't realize it at the time. I thought healthcare actually would be the best vertical. Whereas the vertical that didn't really take off is financial institutions. This was no surprise. Oftentimes, Palantir helps with compliance, which is a cost cutter, not a money-making side of the business. So the reason financial institutions don't use Palantir as much as they should is because it doesn't really increase revenue for them. It helps with compliance, which does eventually help their earnings because it cuts costs, but it doesn't really grow the company in and of itself. I do think Palantir has products that can help grow financial institutions, but they just haven't really gone after that market too much. Obviously, in 2018, they had some spats with JP Morgan. There were some issues that happened and they ended up getting fired. So there was things that happened that I guess made them feel a little bit more apprehensive to go over the banking sector and really hedge their bets on energy, healthcare, and manufacturing. But maybe if they go back into financial institutions and they can help a lot more, then that is a vertical that can take off for them. Okay, number 5. In terms of higher revenue growth, the expert thinks Palantir is not seeing the growth rates yet because the sales cycles are very long and because Palantir is still working on solving the issue of having to deploy fewer engineers to work directly with the client. Before he left, Palantir was exploring options like education programs and channel partners. I mean, that makes sense to me. Obviously, the market's not seeing higher growth rates yet because not only are sales cycles long, I think interest rates are high and it's just harder to sell this type of product into the current macro environment we are right now. And AIP is collecting a ton of customers, just not monetizing them yet. So I do think that the market will see those growth rates eventually. It's just going to take time for that to happen. And obviously, as interest rates come down, sales cycles become slower, AIP starts monetizing, we're going to see a lot more growth, but that will take time. Finally, the expert thinks that Palantir is a platform way ahead of anything else in the market and that there is a moat. That makes sense to me. I mean, look, from all the research I've done, I believe there is a moat to Palantir. I think it is a platform way ahead of anything else in the market. Obviously, this guy's biased. He was an engineer that worked there, but he doesn't work there anymore, you know? So from his perspective, when the work he did there, the type of analysis he did, the types of clients he worked with, he believes that Palantir actually is a platform. And I've heard a lot of criticism around Palantir as a company, especially those like sales Glassdoor reviews where people are like, sales culture sucks, blah, 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 blah. I've really never heard an engineer say that the company doesn't know what they're doing when it comes to tech. Like, the company knows what they're doing when it comes to tech. I mean, the people that work there actually, 7 rounds of interviews before you get accepted, right? Major compensation packages because you're working on really crazy important stuff. DoD contracts for hundreds of millions of dollars. Like, you wouldn't argue that the tech isn't real or that they don't know what they're doing. Now it's a question from the business side, which is what all of us as investors are trying to figure out, right? We're like, all right, we get the tech. Now we're trying to see how do you actually make a business out of this? Can we execute and really have a product that can scale to the entire world? Okay, last thing I want to discuss today, deploying full spectrum AI in days, how AIP bootcamps work. AIP bootcamps are the new go-to-market strategy that Palantir is using to be able to get AIP out into the world, obviously their latest product. And their argument is like, look, if we figure this out, then we are really going to have a big chance of winning when it comes to scaling AIP. Interesting quotes that I want to read. First of all, on the thumbnail, these AIP bootcamps are like doing 4 months of work in one day. That's the vice president of data and analytics at Trinity Industries, Stephen Ecker. That's insane. An AIP bootcamp is 4 months of work in one day. I mean, these boot camps seems pretty intense. Elliot Smith, a data scientist at the same company, says, I approached this engagement very critically, like most data scientists and engineers tend to do, and I can say that I left exceptionally pleased. It's hard for someone to come in and build a product in one day, especially when we have been working with other entities for months and hadn't seen results. We worked with Palantir and got the results that we wanted in less than 8 hours. We presented to our CEO the next day. That's what I'm talking about. Like, this is the type of stuff you want to see coming from the smart guys, the data guys, the engineer guys that are skeptical of the new products entering into their atmosphere. They don't want to deal with that stuff. Palantir came in, they said, hey, give us a day. Give us 6 hours, take a lunch break, give us another 4 hours, come in here. It'll be a little bit of a boot camp. We're going to build something for you and you're going to want to buy our software. Just give us a chance. And then boom, you get, some data scientists really seeing the potential here. So it's really interesting to see how they're scaling these boot camps. A couple things I want to talk about from here. We have a growing backlog of AIP boot camps due to the overwhelming demand. That's from Palantir. In order to make the most of the time we do have together, I want to share some early learnings about why our partners are finding these sessions to be so effective. Now, remember, overwhelming demand doesn't mean they're going to close all those clients, but it does mean you have a ton of leads essentially coming in. And it's not a lead where you're talking to them on LinkedIn. It's a lead where you're literally building them a product. So the odds, the probability of closing that client because you're actually doing something really meaningful for them is just significantly higher. Molson Coors, head of the global enterprise architecture, says it provided an opportunity for Molson Coors to not only understand the foundational elements of generative AI and LLMs and the hype surrounding it, but also to quickly pivot into actually leveraging LLMs on our own data in a secure, protective, and interactive manner, which is the entire thesis around AIP. Palantir says the reason it works is because there's no barriers to entry. AIP comes fully integrated and interoperable. It's enterprise-grade software that's equipped to handle your most sensitive data and prime for your fingertips. You learn to fish, therefore you eat a fish. And AIP Bootcamp isn't about abstract learning or using pre-baked apps. Bootcamps enable participants to tackle their real use cases while developing the intuition and skills to build independently moving forward. And you move from chat to automation. Molded by initial experiences with GPT-4, many start with the mental model of a chat-style experience, but AIP Bootcamp participants very quickly realize the non-algorithmic compute potential of the AI revolution reaches far beyond chat. And finally, you're allowed to make AI your own. Our customers have substantially intellectual property locked in unstructured data repositories and the minds of their talented employees. AIP allows them to immediately incorporate expert-driven feedback loops with applications that meet the experts where they are as they execute their work. Imagine going into a bootcamp, bringing your company's personal data, intellectual property, Palantir saying, let's take a segment of that, put it into this infrastructure, this AIP software we built, and let's see what you can do with it. And so, I mean, again, if you're Molson Coors, or let's say a better example, if you're Target and you want to work with Palantir and you take a bunch of supply chain data around toys, right? Like 5 big toys that you have selling, you take some supply chain data and you put it into AIP, and Palantir shows you 17 different things you can do with that data, leveraging generative AI and LLMs. You walk away thinking, if we could do that for 5 toys in supply chain, maybe we could do that in other parts of our business. And that's why I think these boot camps are one of the more unique go-to-market strategies that I've seen from a software company. And it seems like that's why Palantir is getting 50% month-over-month growth in terms of deploying some of these clients onto AIP. This is the list of clients currently using them. We saw this at AIPCon, so pretty much the same clients there. They talk about some of the concepts that they're developing at AIP Bootcamps: dynamic scheduling, underwriting, sales and marketing, procurement, supply chain, systems coordination and harmonization, customer service, infrastructure projects and management, quality and claims management, frontline engineers and operators, hospital operations. There's a lot of different things in terms of products that they're developing or even use cases they're developing at these boot camps. And obviously they have a bunch of clients that have showed off their use cases of AIP at AIPCon. Brett Collins, director of analytics, ended up saying, knowing where the technology excels and how to iterate development, given that it is a different approach to traditional machine learning, was a key takeaway as we look to integrate generative AI into future applications. Director of analytics at Navistar. I think this AIP bootcamp that Palantir has got going on is a really strong idea. I think it can be incredibly effective, and I think it can ultimately help them scale and bring massive growth from a client adoption perspective to eventually be able to monetize. Last quarter, we got about 38 clients. We have 421 in total. Hopefully, we can grow above 8% quarter over quarter in terms of client growth, which means even if we have 9%, we'll add another 40, 45 clients. And it's just another way for Palantir to be able to get in the door, get these people hooked onto their version of generative AI and LLMs, Google, Microsoft, they have massive distribution. They're going to do it their own way. Palantir has to find a way as the underdog to get in there, get those contracts, get people to really be hooked. And once they're hooked, they're hooked. And by the way, if they eventually buy AIP, they have to buy Foundry because AIP is useless without the ontology that's coming from Foundry. So both of them ultimately get to sell together. But if you can convince them that AIP is useful, that's just another reason for why they would be interested in things like Foundry, maybe things like Apollo one day, and other products that Palantir has. Super, super exciting to the end of the week. Thank you all for joining me for the past few episodes. We're doing this new format, one video a day. Hopefully you guys are liking it. I really like it, putting a bunch of segments, a bunch of news all in one thing. And then there's less burden on you as the viewer. You can choose to watch it or not, but it's just one video where you can get your updates every day on what's going on in what I believe is one of the most exciting companies in the world. Thank you guys so much for listening and watching. I appreciate it, and I'll see you next week.